Happy Friday, everyone. Here is your news update for January 6, 2023. And it looks like the markets are slightly up after the 300-point drop yesterday across the broader markets. Might be a bit of a dead cat bounce, and for those of you who are not familiar with the term, it was originated from Wall Street and derived from the idea that even a dead cat will bounce if it falls from great heights. You know, it wouldn't surprise me if some Wall Street guys back in the 19th century actually threw a dead cat off some 3-story trading building in a bet just to see how high it would bounce. Those Wall Street guys are sick bastards. In any case, let's dive into Friday's update. Most investors were dialed in this morning on the release of the payroll numbers in both the US and Canada. Payroll in the US grew, albeit at a slower rate in December, still better than expected, a sign that the labor market remains strong, even with the recent onslaught of interest rates hikes. Now, non-farm payrolls increased by 223,000 for the month of December, above estimates of 200,000, while the unemployment rate fell to 3.5% or 0.2% below expectations. Now, in Canada, the economy added a surprising 104,000 jobs in December, while the unemployment rate fell to near record low of 5%. Now, expectations were for a small increase of 5,000 positions, according to average estimates in Canada. Definitely blew expectations out of the water. Oh, and on that note, congrats to our junior hockey players as they beat the Czech in a hard-fought World Junior Hockey Tournament last night. They won the gold medal 3-2 in overtime, and Connor Bedard, oof.
So hot right now.
So for investors, it would appear that the stronger job market may signal more rate hikes. So be prepared for borrowing costs and companies to potentially execute on some of their cost tightening plans for the year 2023. All right. Next, for those who are World Wrestling Entertainment fans, if you smell what Vince McMahon is cooking, WWE is up 17% this morning after Vince McMahon said he had elected himself, luckily he's the largest shareholder, executive chairman of the company, and he brought on 2 former WWE co-presidents to become board members. McMahon indicated that upcoming negotiations with media rights and planning for strategic initiatives will require him to come out of retirement and take the reins once again. Now, it looks like investors liked the move as the stock got halted this morning after a quick 17% jump to $84.25 per share. Now, you gotta hand it to Vince McMahon. That was quite the dramatic WWE move. WWE has recently been a decent stock despite the pushback of the broader markets, as the company has proven that if you focus on your brand, cater to your loyal followers, you'll be able to fight through the difficult times. Next on the list, we have Costco. Costco saw solid sales numbers for December. They reported net sales of $23.8 billion in December. That's a 7% year-over-year increase, which isn't a surprise with inflation when it comes to groceries. The stock is enjoying some upward movement today, up 6% this morning on trading. It's a bit of a mixed perspective I have on this one, as a solid increase is good news that consumers are still spending. It is a good indicator of broader economic activity. Now, on the other hand, the feds may look at this and say, well, we got to keep hiking rates. So I guess time will tell, but look for the announcement in their next potential rate hike in February. Okay, next to cover today is Lululemon. The company that brought sexy into the yoga industry is also up $6 per share today to $332. The athletic wear maker added 1.8% following an upgrade to overweight from EcoWeight by Wells Fargo, which cited its momentum and attractive share price. Lululemon had hit a high of $473 per share in November of last year and has a bit of a roller coaster following pretty much in line with the broader markets. When you look at financials, they are trending upwards, so look to their next update sometime in March to see how the trend goes. Analysts look like they're expecting a slight hit, and the market seem to have built that into the current share price. All right, yesterday we followed Bed Bath & Beyond and Silvergate Capital. The companies continue on a free fall today. Silvergate Capital is down another 10% this morning after its 40% free fall yesterday. Bed Bath & Beyond BBBY, after their free fall yesterday, is continuing their fall today. The stock's down an additional 14%. So if you're a short seller, amazing job, great returns. If you're holding on for long term, I'd probably write this off as a loss. Okay, next on my list, Tesla, the stock continues to drop. I limped in for a few shares. Literally, I think I bought 4 shares. When it dropped into the hundreds late last year, I'm pretty much just hanging on for long term, I guess, at this time. Tesla hit another 52-week low today. of $106 a share, dropping 4% on early trading as they had reported dropping retail prices for their vehicles in China, which could signal that they are expecting a slow retail sales for the Chinese market this year. Fox News recently reported that Musk will be the first person to ever lose $200 billion in net worth. Holy shit. 200 billion. How's this guy going to afford to live? So he must be down like to 140.5 billion. I mean, the guy's still number 2 net worth in the world. So yeah, I think he's going to be okay. All right, so finally to wrap up today's update, it looks like solar companies are back on everybody's radar. When President Biden came in to take the top job in the office there, one of his mandates was to accelerate the ESG initiatives. And at that time, there was a slight bump up in various renewable company stocks, but not significant. I think as 2023 rolls in, from what I'm seeing on the corporate front from big energy companies, capital expenditure on ESG initiatives may begin to take hold this year. Analysts cited an improved regulatory backdrop in 2023, ESG mandates, and government and corporate decarbonization goals as one of the big drivers for actual cash now coming into those companies who are supplying products for the bigger companies to meet these ESG initiatives. So look to some of the individual solar companies like First Solar, or more diversified renewable funds like Vanguard's Social Index Fund or iShares Global Clean Energy Fund for some opportunities. I picked up some shares in the iShares Global Clean Energy Fund this morning, looking for more of a long-term play on that fund. All right, well, that's the news update for Friday, January 6th, 2023. Click that follow and like button. Have a great weekend. I will see you in the next update.